something.
Well, time to check in on what happened on the markets this morning. The Asia-Pacific markets, they slumped. Of course, it was as a result of what happened in Wall Street, where we saw those particular markets retreat sharply. The main concern is that inflation print that we saw yesterday, triggering fears of an interest rate hike. When we look at the individual bourses on the Asian side, the Nikkei down nearly 2.5%. The Chinese mainland markets also took a tumble. When we look at the Shenzhen composite, that took basically fell about 1%. The Shanghai composite down nearly 0.9%, and when we look at things over on the side of the Hang Seng Index, that also following suit in negative territory, down about 1.6%. As we shift, to the other side, looking at the European markets, they're also retreating again. It's that inflation theme coming through. Those individual markets, the FTSE down 2%, the German DAX down 1.33%, the French CAC down 1.1%, and US futures also looking a little bit negative right now, adding to those steep losses that we saw yesterday. Of course, the Dow Jones clinching its biggest loss since January. But we're going to discuss that a little bit later on with our market watcher. But for now, as we shift things to the JSE side of things, Long for Life published their financials. Of course, at this particular point, they are making that decision to hold on to the dividend, and they're mulling the options right now, whether it makes sense to continue the status quo, whether it makes sense to unbundle a little bit right now, or even delist that particular share, trading up nearly 0.6%. We also saw trading updates from the likes of ABSA, Tiger Brands, as well as Redefined Properties. But to get into the actual details, we are joined by our market analyst, Patrice Rousseau, who is the Chief Investment Officer at Ashburton Investments. Patrice, thank you so much for your time this afternoon. Patrice, not sure whether you can hear me, but let's start off by, getting into details as to, how you're finding the JSE's trade right now. Well, we'll see if we can establish that connection with Patrice. But the other news, not necessarily relating to what is happening right now with the inflation theme, is news that, Tesla taking a sharp turn when it comes to Bitcoin. Elon Musk, who's been the biggest cryptocurrency booster of late, saying that, basically right now they won't be accepting any crypto payments when it comes to Tesla. They were directing Tesla at some point to buy about $1.5 billion in Bitcoin for its corporate treasury earlier this year. Yesterday, he abruptly took a turn, tweeting that Tesla would stop accepting Bitcoin as payment for cars, citing environmental reasons, and saying here, and I quote, "We are concerned about rapidly increasing use of fossil fuels for Bitcoin mining and transactions, especially coal, which has the worst emissions of any fuel." And right now, as we look at the Bitcoin price, it's still continuing in that negative trend. After that tweet yesterday, Bitcoin's price promptly plunged by more than 10%. Tesla says that it would begin accepting cryptocurrency in a few months. But let's try again with Patrice. Patrice, can you hear me? Patrice?
I can hear you. Can you hear me?
There we go. Fantastic. Patrice, let's talk about JSE markets right now. What do you make of the performance?
Yeah, it's very interesting. We had a very strong start of the year. The JSE really outstripped world markets. We had, until the recent sell-off, a gain of 15% over the last few months since the beginning of the year, which was really impressive, led by the resources stocks, up almost 30%. And then we had the news from the US that inflation numbers were really outstripping all expectations, which is a big concern given the amount of debt in the system and the fact that there's been expectations that the Federal Reserve wouldn't be tightening interest rates until late next year. So the concern now in world markets is that very loose monetary policy that we've seen since the COVID sell-off would lead to a change in stance if we see inflation coming through, like we've seen in the latest print of US CPI at 4%, that interest rates would start to rise in order to combat inflation, and that would put the brakes really on a very expansionary stance that we've seen by the Fed and by other central banks, which has led to a very strong growth rebound and a very strong rebound in global equity markets as well.
What do you make of the Fed right now? I mean, some may be even thinking that the Fed is stuck on thinking inflation is transitory.
Yeah, I think this is the very interesting question. Inflation looks to be a problem over the short term because we have capacity constraints whereby very strong demand and supply chains still being restrained and a little bit of cost push inflation. Unit costs in the US are up 14% because you have increases in oil prices, food prices, soft commodity prices. But the Fed still looks at targeting 2% inflation over the longer term. So it depends on your horizon. Really, short term, if you look at 5 years, the break-evens are around just below 3%, which doesn't seem high, but it's at 15-year highs. So the system has been used to, over the last 10 years, an average inflation level of 2%. Now we're expecting this to go maybe above 3%. And the Fed wouldn't be that comfortable with that if that starts to become a trend. Anything above 2% might be seen as a problem by the Fed.
I wanted to ask you, what did you make of the announcement by Naspers yesterday? I mean, do you think this solves the problem that we've been having so far, or what do you make of it?
Yeah, very interesting. As you know, Naspers has been trading at a 50% odd discount to its main holding in Tencent, the Chinese internet company. And it tried to solve that by having a listing of its subsidiary process in Europe. And even that share process was trading at about a 30% discount to Tencent. So one of the solutions that Naspers is trying to resolve is the fact that it's such a big weight in the JSE index. We're talking about 24% of the Naspers market cap is represented in the all-share index, which leads to some issues for especially professional managers who don't want to hold often more than 10% in a single stock. So what Naspers has done now quite cleverly is to swap its stake in Process so that Process becomes a big holder of Naspers and to try to close the discount. So Naspers will go from holding 73% of Process to holding 57%, and Process will increase its stake by about 45% in Naspers. So there's a share swap, 2 Process shares for a Naspers share, and that should reduce the weighting of Naspers on the all share by about 9%. And that will reduce the problem that most managers have, is to get a full weight in the Naspers share price. And obviously, on the other hand, Process, which is European listed, will get a bigger weight, and they will enter the top 20 in the European stock indices, which should create more demand there.
Well, Patrice, unfortunately we've run out of time, but thank you so much for joining us this afternoon. Looking forward to chatting with you again. That is Patrice Rousseau, who's the Chief Investment Officer at Ashburton Investments. We're going to take a short break, have the labor force, and then we're going to come back to the JSE for the Alternative Investor.